All right, y'all, we are live on this beautiful Sunday. God bless everybody in the name of Jesus, Yeshua the Messiah, even if you are not religious. I pray you and your family are super blessed as Bitcoin is getting this extremely slow, grindy, choppy move to the upside, back above $86,000 after coming all the way down to $80,600. I'm still in the long trade that I took on Friday from the local Fibonacci golden pocket, from the low to the high to the 618. Stop loss still where it was on Friday. And I'll be honest with you guys. The title of the video says, is it a trap? Well, I'll be honest, so far it definitely looks like a trap, but again, we have to understand that the Bitcoin price is bouncing from the last hope of support, the last ray, the last shimmer of support that we have is the zone between the Fibonacci 786 and the 886 fib. Remember, just to quickly draw a little bit of a backdrop, we'll touch on this again later, the chance that we will print a hidden bullish divergence, which will pump us so fast and so hard that all the bears will get absolutely wrecked, is still possible. The chance is still possible so long as we don't take out the low at $75,000. All right, this could just be a really deep retracement that could give us, yes, a lower high, boom. Or it could surprise everybody and all of a sudden, bam, crypto is cool once again. We're gonna make crypto cool again, guys. We're gonna make Bitcoin great again, potentially. We've got to give a major shout out to everybody in the chat right now. First of all, major shout out to Around Town, Mr. Crazy Tone, shout out to Crown Chakra TV. Crown Chakra TV, God bless you, bro. It's so cool to have you here, man. Is this the real Crown Chakra? God bless you, bro. Thanks for popping on in. Shout out to Jay Armo. Shout out to Eddie 2018 SK. Shout out to Shirley Sound. Shout out to Joe Potter, who's long and strong, baby. Shout out to, man, it's so hard to pronounce these names now that YouTube has changed their the way that they post them. But I'm gonna say Drawled Julian 420, back up to 100K, and then massive dump. Shout out to BBL Hotline. We are transcending into a new BBL technology era where quantum computing meets butt cheeks. Interesting. Shout out to the Next Wave Crypto. 512 people watching. Smash the like button for a giveaway. Is treadmill comedy considered stand-up comedy? That's a good one, man. Yeah, I'd consider it stand-up comedy for sure. Shout out to John Blake 695. I'm not watching someone who emits emissions carelessly like that. Well, I'm sorry, man. I can't help it. You know, I just can't stop emitting carbon carelessly. Shout out to Harmonic Psycho 7. Ignore 1 through 7. Shout out to John Schmanecki. I like you, Jason. John, man, you're the man, bro. All right, you're the man. Shout out to Getchy, not the peptide injections. Number 7, I cut my own hair. Yes, guys, this is not financial advice. I cut my own hair. Let's take a quick look at Jason Casper's haircut. All right, look, I cut everything off the back. I just leave a little on the top, all right? And look, it could go either way. I might wake up like today. I woke up with a bad hair day, all right? But that's okay. That's okay. We just put on the hat, right? We just put on the hat. Major shout out to 000 Chris and Investment Time BD, K-Rob 86, and Beej 4584B, and Roy TX 7XZ. JC so funny, love it. Best disclaimer in the game, baby. Look, my real disclaimer broke here, so I had to quickly make a new one, which I know would be very well understood without any legal jargon. Bro, WTF is that haircut? I'm dead. Well, I hope you're not really dead. But what is the haircut? It's called the Casper Special. All right, it's where you take a shaver and you put your hand here, okay? And then you shave all around using the hand as protection without looking. And then you go to the side and you shave up like this. And the other side, you shave. And then you leave some on the top, okay? You leave some on the top. And really, what you end up with is this look. Now, people are laughing now, but you have to understand, I'm an influencer. You just watch. Pretty soon, you go on crypto YouTube, everyone's going to be walking around like this. Everyone's going to do it. It's crazy. All right? I'm influencing you guys right now. I can see you're all influenced to do the same thing. All right? Now, am I using steroids? What do you mean by that? What do you mean by steroids? Hopium Copium. Shout out to Hopium Copium. Shout out to the Clip Colt. Can you cut my hair too? I don't know. Your name is the Clip Colt. I feel like you're the one that should be clipping my hair. Shout out to Daryl from New Zealand. Shout out to Papa in 1994. Shout out to Muhammad67K9L. I'm 17 and in the market for 4 years. What do I think about you? Well, I think you're in a great position, honestly. If you're 17 and you've literally been in these markets since you were 13, I think you're in a better position than probably 99% of 17-year-olds, all right, who are literally out there playing video games and not learning anything that's going to benefit them later in life. I think you're in a wonderful position. I think if you really stick at it and study and learn, when you are my age, I'm double your age. My goodness. My goodness. I am so old. You're going to be very, very comfortable in life. You know, assuming that, like, there's not, like, complete global upheaval and financial collapse. You know what I'm saying? Test, Adderall, Trenbolone, Metana. Oh, yeah, I'm on all of it. Klein, Tren. Did I open a short before the stream? No. This is still my short from Friday as well, guys. All right, this is all the same. I haven't touched the dang computer, all right? I've not touched the dang computer since Friday. It's the same trade I've been in since Friday, all right? Still partially closed, all right? So yeah, no, I shorted the bottom when we got the breakdown and back test of 87.4, and now we're coming back up to my entry. All right, now let's discuss these crypto markets, because look, it ain't no surprise that we are coming back down into the zone between the 786 and 886 Fibonacci. This is our last hope, as we have said for quite some time, of getting a hidden bullish div on the weekly. What is a hidden bullish div on the weekly? It's where the price makes a higher low on a trend line, and as the price is making a higher low, the oscillator is making a lower low. This is a continuation pattern in an uptrend, and we have been watching these continuation patterns happen. The last one was back in April, okay? Back in April, if you guys remember, this is where your boy Jason Casper was getting ultra bullish, calling for new all-time highs because of the hidden bullish divergence, all right? You go back to April, and as soon as we got that hidden bullish divergence, historic signal, last time we pumped 100%, this was not even a clickbait title. We were assuming, you know, we were going to get the move, because we bounced from the trend line, we were assuming the move back to the top of the range and a new all-time high at the time, which I suspected would be around $115,000. All right, now this time is different than last time. Why is this time different than last time? Because we have actually broken weekly market structure bearishly. We have officially now made a lower low on the weekly time frame, taking out the last low at around $100,900. And not only this, but if we actually take a look at the entirety of this bull market uptrend, we are breaking below the trend line, like the macro bull market trend line that we could take all the way back from November 2022. And you can see that we bounced from it pretty much perfectly every single time. And then all of a sudden, we have a massive weekly candle below the trend line, below the last weekly higher low. And we are running out of room to print a hidden bullish divergence down here. All right. The structure of market cipher B right now, in my opinion, is more bearish than bullish on the weekly time frame. And the reason why I say this is because we have gotten multiple drive now in the bull run of bearish divergence with money flow and momentum. All right, the last bear div was a money flow div, very powerful on the weekly. And now actually, not only have we seen the bear div, but we've confirmed bear market structure on the weekly. So I still have a ray of hope here, because again, I'm not going to say this very oversold momentum wave on the weekly can't give us a big old pump. It will. Believe me, whether or not we're in a bear market or a bull market, this weekly dot on Market Cipher B is going to give us a pump no matter what, right? You get an oversold wave on Market Cipher B, you get a pump no matter what. I mean, July 2022, it wasn't the bottom yet. We had a big old, very oversold wave on Market Cipher B. We got ourselves a big old pump, all right, of about 40%, all right? In the bear market, the green dots on the weekly give us pumps 50% to the upside, guys, 50%. All right, so believe me, when this thing confirms, we are going to get a big pump no matter what. But the overall, in my opinion, market structure is king. And if we're breaking structure on these high-term timeframes, it's not looking good. If we go to the 2-month time frame, we also understand that we have confirmed we've confirmed a regular bearish divergence on the 2-month time frame. Historically, this is the top signal every single time. All right, every time. So I have to lean more bearish than bullish on these higher term time frames right now. But we are at a very important area, as there's 1 week left of the month of November. If this monthly candle can close above our previous lows, that does leave the possibility for one last face melting rip to the upside to wreck all the bears, okay? Now, why do I say this? Again, we're objectively looking at the chart. And remember, as traders, we cannot know for certain what the price is going to do in the future, right? We can't know exactly what the price is going to do. We can plan for different possibilities. Possibility number one is that if we get a bounce from this area, it gives us a lower high and we reject from probably, I would say we could get a move all the way back to the support resistance flip at $109,000 before coming lower. All right, that's possibility number one, if we hold this support. Possibility number two is we do what we did last bull run, which is this. We get confirmation with the red dot, and then we put in a double top. We get a face melting rip to the upside just to get more bear div on the 2-month. And then we start the real move to the downside. Those are the two possibilities right now as we are holding the higher low. Remember, if we come below $75,000 and close the monthly candle below the last monthly order block at 82.3, then I become even more bearish because now we're changing market structure on the monthly time frame. And you can't just change market structure on the monthly time frame and expect everything to be honky-dory. Could it be honky-dory? It might be honky-dory. But chances become very low. Probabilities become very low once you're changing market structure on the monthly. So this is the last shimmer of hope for Bitcoin here. As we come down between the 786 and the 886 Fibonacci from our April low to our current all-time high. Now I want to take a look at the Fear and Greed Index here, because look, you could get these Theo Grace necklaces where you could have 2, 3, 4, or 5 names. You got 5 kids. Maybe their names are Benjamin, Alice, Roger, Keith, and Daniela. You could have one necklace to remember all your kids' names all the time. Now, trust me, I have 3. And it's very difficult to remember their names. Very difficult. It is impossible. Right? So I would actually wear a necklace like this so I could look down and realize, okay, I have 3 names to choose from. I have a 33% chance of getting it right. All right? Which is pretty good odds. Pretty good odds. Actually, better odds than Bitcoin continuing up if we close a monthly candle below the current monthly low. And now if we look at the Fear and Greed Index right now, we're actually at a 13, which is interesting because, you know, it's pretty much the exact same. Yesterday, interestingly enough, was a little bit more fearful. On Friday, I think we were... Yeah, so on Friday, I'm pretty sure we were 14. On Friday, I think we were 14. So we're lower than Friday. We're more fearful than Friday, but we're less fearful than yesterday. And we do have to understand, like, historically speaking, guys, the Fear and Greed Index, this does mark significant bottoms, right? The last time we had a bottom on the Fear and Greed Index, it was April. It was basically our bottom, right? So here we are again, bottoming out, which means we should not be surprised when we get a rally, especially when that weekly prints a green dot, okay? Now, across the board, I'd say things are bearish in the news. So we need to be aware. We don't trade the news, but we need to be aware of the news and what articles are saying about Bitcoin. All right, it is important to kind of keep our pulse on what people are saying here. So Bitcoin is down below $85,000, lowest in 7 months. Ethereum also very low. Why is the news telling us that this dump is happening? All right, we need to understand why people think the dump is happening. As technical traders, we can look at the chart and say that, well, why is this dump happening? It's because we came up to a key short setup in the Casper crew at $125,000 with a bearish divergence. We took the short trade in the Casper crew VIP Discord, which is still open from the exact top. And now we understand, look, we've had a monthly bearish divergence. We were expecting this move to the downside for a long time. All right, for a long time. This is not what I wanted to see, and I'll tell you why. All right, the monthly chart right now, it's about to confirm another drive of bearish divergence. I'm just being real. I'm gonna be real this stream. I'm gonna get some haters. I don't care. Here we are at the all-time high. I would not be surprised if the top is in, okay? What we do not want to do is close a candle below 124.5. The question here is, are we bullish or are we bearish? The end is for sure near of this bull run. All right, so like we've been expecting this for a long time. So here we are. But what is the news saying right now? The news is chalking all of this up to stronger than expected US jobs data, which dampens hope for rate cuts. And really, this whole rate cut thing of no rate cuts in December is one of the reasons why people are saying Bitcoin is dumping. We've had large liquidation events and low liquidity. So we're not seeing a lot of actual money coming to the market. We're seeing a lot of people exit the market. Open interest is going down, meaning people are closing their positions. And on top of all that, we're seeing people get liquidated. All right, so people are not participating in the market. They're taking their money out of the market. People are expecting something bearish to happen in December. Also, we've got some tech concerns bleeding into crypto. People are worried about quantum computing potentially hurting Bitcoin. We're seeing Bitcoin miners pivot from mining Bitcoin into getting into AI and high-powered computing. And you know what's very interesting is all these bearish fundamentals are happening right on schedule when we just consider historically when the top is supposed to be in for Bitcoin. It's supposed to be in Q4 2025, Q1 2026. Everything's happening right on schedule. All right. What's happening with Bitcoin? 99 Bitcoins. What do these people have to say? What does this article have to say? Basically, the technical analysts at 99 Bitcoins are telling us if Bitcoin can stay above $85,000, a relief rally could occur. But if it fails to hold, we'll see lower. Absolutely. I couldn't agree more. Right now, the Bitcoin price is holding the 786,886 zone. If we hold this level, like I said before, we are going to probably see some kind of bounce, which will either give us a lower high at around 109,000 to the high end, or potentially if that weekly bullish divergence plays out. There we go. If the weekly bullish divergence plays out, then we might actually see a liquidity grab of the highs again, right? So everything is right on schedule right now, guys. Technically and fundamentally speaking, everything is right on schedule. We got some more bearish news from Reuters or Reuters. I don't even know how to say it. Bitcoin on thin ice after sinking in flight from risk. It's funny because this exact title is plagiarized from another article that we read last week. But yeah, these guys are talking about how Bitcoin is down near 80,000, a 7-month low. We've seen $1.2 trillion come out of Bitcoin, out of crypto in the last 6 weeks. And we're seeing the ETFs, money is leaving the ETFs as well. So across the board, guys, everything is pretty bearish, okay? But is there a glimmer of hope here? Well, let's dive into the technicals on the chart, okay? I'm still in the long trade from Friday. Let's dive into the technicals on the chart. First of all, let's go to the daily time frame. The daily time frame right now is printing a big bottom on the daily. And technically, if we want to get technical, if it confirms, it will be a hidden bullish divergence on the daily. This is the first step of printing a bullish divergence on the weekly, right? The daily time frame will then bleed into the weekly time frame eventually. This could be the first sign of something happening on the weekly. Let's go to the 4-hour. The 4-hour time frame. We don't really have nice bullish divergences on the 4-hour time frame as we came down to this low. We have slight bullish divergence, but the money flow is pretty iffy. Nonetheless, we could still make the case here that as we continue to make lower lows, we are seeing the 4-hour get higher. And if we want to take the money flow back from October 17th, is that even getting higher? Let's see here. No, it's not. Okay, so the 4-hour money flow is definitely not loyal. All right, so it's pretty ambiguous here. And something else I would like to say is this. This is happening over a weekend. We made that low on Friday at 7 in the morning New York time. And then we've had a move up over the weekend. So what does this mean? Well, it means we're going to open up with a CME gap below us. All right, we put on the CME chart, and you can see that that Friday candle closed at around 84.6. So we are going to have a CME gap around 84.6. And something else we should keep in mind here is, so far, until we actually, in my opinion, start to see any local sign of strength here, the probabilities are we are in a strong downtrend and we should expect more downside. What do I mean by a local sign of strength? We need to see some kind of market structure change that could let us know, okay, look, we are actually now starting to see the bulls step in with more than just a dead cat bounce. So let's go ahead and take a look at the volume of the entirety of this range here. We're going to pull it from the time Trump wins the election to our present day. And you can really see that our key level is going to be $91,000. So if we get a rally up to $91,000, we need to just recognize the fact that this was resistance back here. It tried to act as support here. And so this is going to be our first area of resistance. When we come into this area, we expect a rejection from here. When we get this rejection, then what we need to look for, if we want to see a sign of strength, is coming down and making a higher low at the Fibonacci golden pocket retracement, which is probably going to be coming in around, let's see here, let's put on our 618. That if something like this happens, the back test of 85K is going to be important. All right. So essentially what we're looking for here, guys, is we want to see New York start to trade again. We want to see the traditional markets open again. We want the weekend to be over. It would be nice to see a little bit of a relief here, get a rejection, and then back test this major zone of support that we have here at the 786 fib. That's going to be around $85,000. If we make a higher low here and we see some bullish signs, that could actually give us a move back to around $96,000 POC. That would actually be our first major sign of strength here. As of right now, longing in this area, we need to treat it like a scalp or a day trade. We obviously I'm holding a bit of this trade in hopes of a major swing, right? I don't plan to take more profit on the long in case I did catch the bottom here, but I am not expecting us to get a big move right now. What would make me expect to get a big move? If I see we rally up, we come down, we fill that CME gap, bounce once again from $85,000, and then we're back inside the range and we're coming to the POC, then I would say, okay, this actually is starting to look nice. Let me go ahead and look to add to the long position if we make another higher low. I would probably actually even add to the long position if we get a move up to 91.3, back test the local golden pocket. I would look to add, and you know, as long as we are staying then above this level here, right? This is super important. Let's say we get the reclaim of 91.3. If we back test 91.3 and hold that as support, then I'd say, yeah, we could very easily see a move back up to 107, which is that last support resistance flip from the August 31st low and the November 10th high, right? That's what I would be looking for a bullish scenario to play out. Now, there is a case to be made here that this could play out. Why? Because technically speaking, we do have 4-hour bullish divergences. Technically speaking, we have a almost confirmed daily hidden bullish divergence. And we understand that our weekly momentum wave is so oversold that when it confirms, it's most likely going to give us a double digits pump to the upside, right? Over 10%. I'd say probably at the worst 15 to 20% and potentially maybe even like a 50% pump, right? I know it sounds crazy, but you know, that confirms a 50% pump could take us to a new all-time high. Actually, exactly 50% would be around 120,000 back to the top of the range. At that point, I would expect a new all-time high. So, you know, right now we got to be cautious. Major sign of strength, reclaim 91.2. Once we reclaim 91.2, that gives this weekly time frame even more of a good look here, because we haven't changed monthly market structure, but we could print a very, very oversold momentum wave on the weekly here, and then we could see more relief. In the meantime, before we reclaim that level, we should be expecting more downside, right? We should be leaning more bearish right now than bullish, just because of the actual technicals on the chart, right? You know, market structure is king, and we haven't seen that major change of structure yet. We haven't seen that major support resistance flip yet. Now, let me be very clear. I am not looking for any kind of a swing short around this area, all right? I can't be looking for a swing short around the area. The way I'm approaching shorts right now is very similar to the way I'm approaching longs right now. If we're shorting this area, $85,000, we have to recognize the fact that we are literally shorting the last major support after a 36% drop to the downside. We have not seen a 36% drop on Bitcoin in years, guys. All right. We're also need to understand we're shorting a daily bottom and a potential very oversold weekly bottom. So my short trades are basically like this one, right? I'm looking for the short trades and I'm taking profits early. Like, to me, this was a local scalp trade, right? I shorted the back test. I took profit at the bottom of the range to take profit one. Didn't know what was going to happen. I woke up the next morning, price is down here. Obviously, you take profit two when that happens. Now I've let a portion of the trade ride, and I'm about to get stopped out of my entry for a $3,000 profit. This is how I'm approaching shorts. I'm not expecting a massive straight through move to zero. Same with the longs, guys, because I know that we have been in a very bearish situation here, and all these bounces have been short-lived. I got to take profit quick. This is not a swing trader's environment right now. This is a scalper environment, a day trader environment right now. What would be the next major swing trades to take on Bitcoin? I would say the next major swing trade to be taking on Bitcoin is around 96, the high volume node of the range, right? If we come back up to this zone here to back test it's like 96 to 98, or just our support resistance flip. This level is obviously massive, right? It's a high volume node. It was resistance, support. Then I'd say this is a good place to be looking for a swing trade to take it back down to under $75,000, right? This is the next swing trade zone for me. And if we get even more of a rise from the all-time high, if we pull our Fibonacci golden pocket, then we're looking around $107,000 to $108,000. That's going to be our Fibonacci golden pocket. And if we take a look at the volume up there as well, let's take a look at the volume of this upper range. That's also going to be our value area low in our POC area, and it's going to be the back test of the trend line of the entire bull market. So a very juicy swing short trade would be coming back up to around 108, right? We've got ourselves the value area low, the POC, the golden pocket, the back test of this trend line. And then, yeah, I'd also be looking to take this down to around $75,000. These would be the two big swing shorts that I would be interested in right now. But as for in this area where we're at major support, you can't really be looking for a swing short. You should be looking for scalps. And also, when you're in a powerful downtrend, you can be looking for a swing long trade. But I would just either A, keep your risk management in check, right? Like take the trade saying it's low probability, but it's a good risk to reward, right? Low probability, but good risk to reward. Or just lock in that take profit one and let the rest ride, right? As for swing long trades, right now, I would be interested in a swing long trade. If we make another low, specifically if we're dipping below $70,000 to come back to the major support resistance flip that we have from the previous all-time highs. All right, to me, that could also be a very nice place to be looking for a swing long trade. Is there a chance the bottom's in now? There is a chance. All right, there is a chance. There's always a chance. Again, if the bottom is in, what would I look for? I would look for the reclaim of 91.5, and then the back test of 91.5, and then, you know, we basically would have the good old-fashioned inverted head and shoulders right down there. We could look for, that's a sign of strength, to look for a local entry back toward the top of the range. All right, that's where we stand right now. We've had the rise on the weekend. We cannot ignore the fact that all this is disgusting looking liquidity. All right, I would be very shocked if we don't drop straight through this like a hot knife through butter, fill our CME gap, and potentially even come back down to the lows to test 80,000 again. All right, so be very cautious in these market conditions. Please don't get chopped up, and please don't get greedy. Make sure that you are taking trades with good risk management, and make sure that you are being realistic about your trades and understanding that, look, if I'm shorting support, I should take profits quick and then let it run in case we do have a massive drop, okay? And same with longs. Like, recognize that this is the last hope support. There is a chance from here we get a big relief rally, but also either use really good risk management or take a quick profit one just to ensure a small win, and then let the runner run. And if the runner runs, if the runner's running and we start to form an uptrend, guess what? If you're in a little long trade from down here, you take a little profit, we come back down, you can add to your position when you see a bounce so that you can say, okay, now my entry's here, right? Don't get greedy. Remember, these markets will wreck as many people as possible, and they show no mercy, and they humble everybody. And whenever you're super confident, that's when you get humbled. That happens to me all the time, right? Whenever I get overconfident, you know, I'm on a winning streak. I feel like the best dang trader in the world. Next thing you know, I'm getting sliced up like a giant salami in a meat slicer. All right, we don't want that. We don't want to be giant salamis within the meat slicer. No, 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 no. Let's take a quick look at Ethereum here. Ethereum is trying to hold support from this very key zone. It is the Fibonacci golden pocket from the low that we made in April to the all-time high. Is that the all-time high for ETH? Yeah, that is the all-time high. This obviously is our last major support that we have here, this Fibonacci golden pocket. I'd say confluence with this little zone right here. All right, we've got our high volume node around 2,500. If we're going to lose this, our next support is going to be the support resistance flip from the bear market resistance at around $2,000 ETH, flipped into bull market support at around $2,000 ETH, flipped into support again after we lose it, breakout back test all-time high. This would be our next support. We lose that, guys, and I don't see why we couldn't go back under $1,500 Ethereum. If Bitcoin's going to get a bounce from 85,000, ETH could get a bounce from 27.66. Also, when we take a look at ETH on Market Cipher B, what do we see? What do we see? Well, we do see the fact that we did print a hidden bullish divergence right over here. Okay, there is a hidden bull div here from the low that we made back here in September 2023 to the low that we made in April 2025. Technically speaking, there is a hidden bullish div on the weekly. All right, now we have an extremely disgusting looking bearish div on the weekly at this all-time high. If Bitcoin can hold 85 and ETH can hold this level, we could get a nice continuation trigger on ETH, which in my opinion would probably give us a new all-time high, and then that would actually be the top, right? That could actually be the top. We could see this kind of structure happen on Market Cipher B. In order for that to happen, I don't think Bitcoin even needs to make a new all-time high. In order for ETH to see a new all-time high, I think Bitcoin just needs to rally above $100,000 for ETH to potentially make new all-time highs. And of course, we would need to see more than just Bitcoin do that. We need to keep a close eye on number one, Bitcoin dominance, and number two, altcoin dominance. So let's just check out Bitcoin dominance right now. We're breaking down from the channel. The daily time frame is flipping bearish again here with the red dot that will confirm in about 5 hours. We're losing the ascending channel here. We know, technically speaking, our next target is going to be below 57% Bitcoin dominance. So, excuse me, if Bitcoin dominance stays below this level, in other words, if Bitcoin dominance can stay in this downtrend, this local downtrend, after breaking out from the macro trend line here, we form this disgusting looking bearish wedge, similar to how the Bitcoin price action has done yesterday and today, this ascending disgusting little channel. If we can stay broken down from this, right, and Bitcoin is getting a rally, and Bitcoin dominance is staying below It's continuing to make lower lows and lower highs. Then we take a look at altcoin dominance, right? And if altcoin dominance is coming up, then I'd say that could give us some of the rallies that we're looking for. Potentially, we could even see ETH hit a new all-time high. If Bitcoin can reclaim 100,000, doesn't even have to hit new all-time highs, could just reject from 107. But that does give us time for some of these alts to get some pumpage back into them, right? Let's not forget how quickly these markets can change. In 1 week, we went from $1.2 trillion in altcoins down to 750 million. All right, we're talking like $450 million about out of the dang market in 1 week. And then not only that, we lose 450 million. And then by the time the week closes, we're back up to 1 trillion. All right, so 450 million out of the market in 1 week. And then in that same week, we go from 750 back to, we get 250 million back into it, right? So we lose 450, then we get 200 million back in 1 week. All right, we could see big money moves in these markets. And if for some reason we get some kind of fundamental catalyst, I don't know, let's say they do cut rates in December or something. I don't know. Here's one other thing that I always think about. It seems to be lately, these rate cuts are a buy the rumor, sell the news event. All right. They are a buy the rumor, sell the news event. Let's go to forexfactory.com here. Forever 21. The heck is that? When was the last FOMC? Was it the 15th? Was it the 22nd? Or was it in September? Oh wait, hang on. What was the last FOMC? The 17th? It was the 17th. All right, so September 17th. Let's go to the Bitcoin chart here. All right, yeah, September 17th. Was that the last FOMC was in September? I could have sworn it was in October. Hang on one second here. It was minutes in October. Okay, it was just a recap. Wow, was it really in September? Man, time goes by so quick when you're in crypto. That was already that long ago, huh? That's crazy. So September 17th. Where were we then? We were right around here. Okay, so you know what? I'm wrong then. I'm wrong. I'm wrong and I'm right, because I remember the rally into FOMC. I remember us rallying into FOMC. And then when we got the rate cut, we dumped. All right, but then we had a big pump. So this is what I remember. I thought we rallied up into this high, but I'm wrong. We did rally into FOMC because the news was bullish. And then once we got the news, boom, it drops, right? Well, now everyone's super bearish based on what they think Jerome Powell is going to do in December. So could it be, guys, because we're basically in December, that we continue to be bearish leading into FOMC and then we get a relief? It could be, right? We could see the opposite of what we saw last time. It seems that lately the market prices it in of whatever Jerome Powell is going to do, and then once it happens, because it's already priced in, we see a reversal because people have already done their actions based on what they think is already priced in. So that is something else that could cause a bit of a end of the year rally for crypto. A bit of some relief here. A bit of some altcoins getting some pumps here. It could turn into something big. I'm not saying it's going to happen. I'm just saying it's something that we do need to keep in the back of our minds as we are seeing the weekly time frame print a very oversold momentum wave. We have not seen it this oversold since literally the bottom after FTX went down, and the time before that was 2019 in December, which was the bottom of that little bear market rally before the vid dump. So yeah, very rare that we see weekly momentum this low. So yeah, there could be some kind of fundamental catalyst that causes these technical things to become expedited. Let's take a quick look at order flow here. All right. I'm going to look at the hourly time frame here on Market Monkey. By the way, guys, I do have to remind you, KCEX, lowest fees in the game. Link in the description. Guys, look, we did a giveaway on Friday, and a lot of people weren't even signed up using my link. They were ineligible for the giveaways. If you want to be eligible for the giveaways that we do, courtesy of these exchanges, you got to sign up using my link. You don't have to deposit anything. All right, we're regularly giving away $1,000. We're going to be doing more next week. It is next week already. We're going to be doing more this week. All right, so make sure to sign up using my link. Sign up to KCEX. It's really the best deal on fees. All right, BLOFIN and ZOOMEX are also doing regular $1,000 giveaways. So if you want to be eligible for those, guys, make sure to sign up to the link. Also, if you want to join the Casper crew, we gave the short setup in advance on October 6th. You can go to jasoncaspertrading.com. All right. Also, if you know how to trade but you don't have money, Klein Funding is a crypto prop firm that I am partnered with. They run on Bybit. You do not need to KYC, but you do need a VPN. And there's 25% discounts on these funded accounts. You can trade a $200,000 account for less than $500. If you don't even want to pass a test, you can get an instant pro funded account. No consistency rules, no challenge needed. And you can see that for about, there's a 15% discount here for just over $1,000, because this is not the actual price. There's 15% off this price. You can trade a $50,000 account with a 70% profit split, max drawdown of 6%. Of course, you can customize these plans as well. All right, so different kinds of drawdowns as well, trailing and smart. So check it out if you're interested. Links all that in the description. Also, guys, I am partnered with Market Monkey, best order flow platform, period. It's pretty much going to make TradingView obsolete, in my opinion, but right now, I am officially partnered with them. All right. So let's check out the order flow here. What has happened in this bounce? All right, this is the 1 minute. I do want to go to the 1 hour. All right, so we have seen a decrease of open interest here. Shorts closing out, obviously. Longs also closing out. Interestingly enough, we saw quite a few longs open here. And then it looks like they have been consistently closing out as the price is getting a rise. Obviously, pretty much all the people shorted the bottom are out. Like, people who shorted the exact bottom are out. If we zoom out even more, shorts are pretty much the same as they were back on Monday the 10th, right? So it is quite interesting here. There is not a lot of open interest. There's not a lot of money one side or the other in the market right now. We did see big spikes in shorts last week. Okay, so last week, every one of these big drops was actually fueled by big shorting. If you take a look here at all of these big downtrends, like for example this, right? Big spike of open interest here. All right, big spike, lots of shorts coming into the market. All right, then when we get the rallies, what do we see? We see open interest decrease. All right, so the rallies are weak, the dumps have been strong. We see once again the big dump right here, the big dump right here, and what do we see? Big increases of open interest. Open interest straight up. Open interest straight up. Then when we get the relief, guess what? Open interest straight back down. Then we see this massive dump to the downside. Big spike of open interest. All right, it's pretty crazy. Even on this last big dump to the downside, massive amounts of shorts opening here. So the actual money in the market has been bearish. The order flow is bearish. We are seeing the bears in control right now. And over the weekend, we have seen pretty much everybody take a break. All right, the bears have been taking a break. All the shorts have closed out. They've taken their profits. They're no longer in the market. The longs, no longer in the market either. All right, there weren't really many to begin with. So I'd say we have a pretty neutral, low volume, low liquidity, low open interest environment to start the week. It's no surprise that we have seen such ugly price action here because there's no money actually moving this market, right? Big decrease of OI this whole way. I'd say the likelihood of a quick flush is high, all right? The likelihood of a quick flush is high right now. And then I'd say wait until Monday or Tuesday. I think Monday is going to be a pretty important day because right now, again, we are testing to see is the 786, 886 going to hold, right? Right now, everybody's wondering, is this hidden weekly divergence possible? Well, as long as we're holding this box right here between the 786 and the 886, it is possible. All right, it is possible. And so let's see what the market does when we open up. We got the CME gap to the downside. You know, I think we're going to be able to do some cool stuff this week. It's going to be a volatile week, I hope. Major shout out to the super chats. First of all, we got Moto Mayhem 83. What do you think of the Bitcoin versus gold chart? Major structure broken. Bitcoin XAO. We'll take a look at it. Got to give a major shout to CryptoFace in the house. What's going on, bro? He says, hey buddy, happy Thanksgiving here soon. Can't wait to send out Market Cypher Christmas baskets to my favorite Market Cypher traders. And that's me! Oh, wow. I am honored, CryptoFace. Thanks, bro. I really appreciate that, man. You know, I'm never without my Market Cypher merch. Like my Market Cypher coffee mug. This is the OG coffee mug, too. The dishwasher safe one. But I've got plenty of non-dishwasher safe ones as well. And of course, I wouldn't be caught live without my favorite Market Cypher shirt. I love so much. I wear it every day. I wear it in the shower. I wear it to bed. That's why it's so raggedy. But God bless you, CryptoFace. Happy Thanksgiving. Thank you so much for popping in, my man. I appreciate you so much. Shout out to Pegless, Complete Degen Gamble. Little Guy, thoughts? All right, we will take a look for Pegless at Little Guy. Let's take a look at the BTC gold chart first, because that is quite interesting. All right, Bitcoin gold chart. Thank you so much for the super chats, everybody. I appreciate you guys. Let's check it out. Bitcoin against gold. Wow. So this is Bitcoin against gold, and we are seeing gold very much so outperform Bitcoin. And we have just changed market structure here. So I have never really analyzed the Bitcoin gold chart before. So this is my first time. All right, so be aware of that, please. We are bouncing from the golden pocket. There's one or two things that could happen here. Number one, oof, monthly. Oof, the weekly. All right, so this is honestly, to be honest with you, not looking too great, to be honest. All right. This is not looking too great, to be honest with you. This is either going to give us a nice fake out, right, where we just come down here and come back up to the top of the range, or this really is what it looks like, guys, a head and shoulders, and we break down. And if we do break down from here, our next target is going to be coming down another 25% to 15.9 Bitcoin. I guess an ounce of gold being worth 15 Bitcoin. Is that true? 15 Bitcoin? No, that can't be true. What exactly is this? How much gold is this? I'm not sure. But yeah, that would be our next support resistance flip at the 786. Let's take a look at the volume of this. We are at very key support, guys. We are at very key support. What we need to do is, if we want to keep trading this range, is reclaim 22 value area low at the golden pocket. Or I'd say we could very easily slide back down to 15, where we have the 786 and this last little zone of liquidity. Let's go to the monthly. Yeah, I mean, really on the monthly, the only support we have is going to be 15 or below. So, very interesting. Could we see gold, or Bitcoin underperform gold? We've been seeing it, obviously. We've been literally seeing it since August. So are we going to see that trend continue? I'd say this is a pretty key zone to be looking out for. Gold is out of control in general. You know, let's go back to our daily time frame here on gold. Yeah, wow, would you look at this? So back on the 17th of November, I'd say the next place to look for a bounce on gold would be the Fibonacci Golden Pocket. And what do you know? We get a little bit of a bounce from the Fibonacci Golden Pocket. A 2-day bounce, about 3%. We have yet to change market structure to the bear side here. I'd say we are consolidating within this triangle. And yeah, the two things to look for really, guys, after a rejection from the Golden Pocket and a bounce from the Golden Pocket, is wait for the triangle to break before your next move. At least that's the way I like to trade. For me, what would be the best thing to happen here honestly, it would have to be, and I'm not saying this is going to happen, but, you know, a little bit more of a retrace. Let's pull the fib from low to high. I mean, 3,600. Those lows at 3,600 right there. You know, this little zone of support, that would be a really nice place to get into gold. 35 to 3,600 backtest. I'm not saying it's going to happen, but this thing is super bullish, and that's our last support resistance flip right there. Let's go ahead and just take the measured move of the triangle and see where that could take us in the event of a breakdown. Oh, well, what do you know? It's a nice support. Now, if this golden pocket holds, we could break out of the triangle, and that's going to bring us up to about a 4,700 per ounce gold, which is pretty crazy to think about. So yeah, I'd say in the event of a triangle breakdown, taking back more of this liquidity, you know, obviously this is a very unsustainable parabola right here, and usually we do give all of those back. So, but remember, gold is a very bullish asset, and this is, objectively speaking, a bull flag, a bull pennant. So I'm not telling you what to do here on gold. I'm personally the kind of guy that likes to get gold no matter what. All right, I'm big into gold in general. Gold is a preserver of purchasing power in general, right? So I feel like putting money into gold is always it's always a safe bet. All right, it might not be the best time to do it right now, because I do think we could see some pullback. But when you zoom out of gold, guys, all right, when you zoom out of gold, as long as we are operating on a deficit spending Keynesian economic system with fake fiat currency, there is no bad time to buy gold, right? You bought the all-time high back in 1980. Yeah, I mean, 20 years you were in the red, but if you made it another 40 years, you're in profit. All right. So this is like the long-term investment preserver of purchasing power. Obviously, buy the dip on gold. As long as we have fiat currency, buy the dip on gold is always a good idea. Not financial advice. All right. This is what fiat currency does. All right. Federal Reserve created back here. Money's 100% on the gold standard until this line. Then money gets off the gold standard. People start messing around with fake money. All of a sudden, the Great Depression, because we're in debt, because we spent money we didn't have. And then, don't worry, the Federal Reserve can step in and fix things by devaluing the currency a little. So all of a sudden, a gold used to be worth $20 an ounce, and then boom, overnight, literally it's up to $35 an ounce because they devalue the dollar. Then we still maintain some kind of a gold standard until 1971. And then Richard Nixon says, you know what, for the health and the safety of Americans, so that you don't accidentally kill grandma by kissing her on Thanksgiving, we're going to go off the gold standard. And the government's going to take your gold, and we're going to keep it safe for you in Fort Knox. It'll be safe for you there, but we're going to go off the gold standard now. You're not going to be able to redeem your fiat for gold anymore. It's just going to be a regular debt note for the Federal Reserve, which isn't federal and isn't a reserve. And from that point onward, they can just print as much money as they want and devalue the currency. And gold has not gone up in value at all. It hasn't. An ounce of gold can buy you the same amount of goods and services today as it could in 1913. The difference now is your dollar has lost value. All right, gold is up 22,000%. That means your dollar's down 22,000%. Isn't that crazy? Isn't that pretty crazy? That's pretty crazy. All right, let's check out our degen gamble. All right, little guy. Little guy, USDT. Oof. I see what you mean, man. Okay, well, I mean, look. Oh my goodness, bro. This is a crazy chart. What can I even say about little guy? Well, it's a degen gamble, so let's just take a look at risk to reward here. Alright, remember, degen gamble here. Let's see. We're looking at a 73% drawdown, potentially get a 12,000% gain. It's 166 to 1 risk reward ratio right now. Well, I mean, look, I mean, when you're talking about risk to rewards like this, man, I mean, you put $100 in here, you put $1 in, little guy, and your $1 investment might go down to a 25-cent investment, or your $1 investment might turn into a $13,000 investment. I say that's a pretty dang good risk reward. Put $100 in, you either lose 75 bucks or end up with 130K. I mean, seems pretty good to me. But, you know, yeah, it's a super degen gamble. Is the liquidity? WEEX is the only exchange that has this. Is WEEX going to have, you know, let's say you put 10K in here, right? Is WEEX really going to have that much money just to give you? Is WEEX going to have that many people buying little guy from you if it pumps up 13,000%? I don't think the little guy market is going to be that intense for you to even sell that on spot. Like, to be honest with you, like, the exchanges that have the liquidity problems and people get screwed on these exchanges, it's because there's no one else to buy and sell that crap, and the exchange doesn't want to front the money, which is shady. But you got to think about that when you're looking to buy and sell little guy. All right, you got to think about that. But yeah, I mean, it is a good risk to reward ratio. All right. Shout out to Dave Digital. What's the benefit of the 0.66 over the golden pocket? It's an actual 2/3 correction, right? So it's a 2/3 correction, 66.6%, right? Which is going to be a third of 100%. So that's why people use it. Now, in general, I don't really think it makes a difference. Sometimes you'll see the 0.66 respected. In general, you could keep both on your chart, but for me, the actual golden pocket is between the 618 and the 786. I'm always looking for my retracement between the 618 and the 786. I feel like that's the new golden pocket. And actually, the 786 to me lately is a better level to trade than the golden pocket itself. It seems to me that the golden pocket is so well known now. That's the 786. But yeah, the reason why people use the 0.66 is because it's giving you the 61.8%, which is the actual golden ratio, right? 61.8 is the actual golden number on Fibonacci. And the 0.65 is just an arbitrary number. I'm pretty sure people used it because they notice it dips below the 618 a little bit and then comes back up. The 0.66 is actually giving you, if you think about it, you know, this is the percent of the retracement. So 66.6% retracement is 2/3, right? It's an even 2/3. And people also can use it for like risk to reward ratios, because, for example, let's say that you have your, let's go ahead and put on our 0 and our 1. All right, let's go ahead and put it on our 0 and our 1 here. And you get the bounce, right? You come up all the way up here. You come back down to the 66% retracement, which means it's 2/3. It means your trade right now, assuming the uptrend continues, right? Assuming that the uptrend continues, means of this whole thing, you're always going to have your 2-to-1 risk reward. And this is messed up because of log scale being on right now. But in general, you're going to have your 2-to-1 risk reward trade set up. If you retrace 66%, right? That means there's 1/3 stop loss, 2/3 is going to be your take profit. And so assuming the uptrend continues, this is a pretty safe bet, because if you're right that the uptrend is going to continue, you're going to hit your take profit pretty much guaranteed. And if you're wrong, well, it becomes obvious when you're wrong, right? You lose this last low, and obviously the uptrend is over, right? So that's why people use the 0.66 instead of the 0.65. In general, I mean, for me, it doesn't really make a difference, because I'm always looking at my 786. If I'm looking for the golden pocket retracement, I'm understanding that really my idea is valid until I lose the 786 in most cases. And a lot of times you'll see the Bitcoin price come down, you know, bounce a little bit, and then dip to the 786, and then get the actual bounce, right? So Shout out to everybody in the dang chat. Ryan only uses the 0.666. Trump coin was the start of the crash. That is pretty true. The 786 is so close to 1 is even useful. Yeah, the 786 is useful. I mean, the 786 is a really important level, right? I mean, look where we're bouncing from right now on Bitcoin, right? Like, we go to the weekly chart here. Like, you know, in hindsight, this is a major time frame. Look at where Bitcoin's bouncing from right now, the 786. You'll often see the Bitcoin price respect the 786. Watch this. Back in the spring and summer of 2024, we come up and what do you know? We reject from the 786. Let's see. Did we get a 786 bounce from right here? Yeah, look at this, right? And then here, like we made our bottom in August 2024. We come up, we bounce from the 786 almost to the dang dollar, right? The 786 is a pretty nifty level. It really is. Let's see here. Okay, that one we front ran the 786 by a little bit here. But even still, we came below the golden pocket. And that's why for me, the retracement zone is between the golden pocket and the 786, right? Because we dipped right into that zone here. So if you had your 6.6 or your 6.5 on there, and you were waiting, making sure we weren't going to lose those, well, we wick right through. We wick right through. Where was the famous rejection? Did we even come up to the golden pocket in the bear market? No, we didn't, but... yeah, look at this one too, guys. Y'all remember this? From the high that we made here in December 2021 to the low that we made in January 22. Look at this. Where do we reject? The 786. She's back to her old tricks. You know? So yeah, that 786 is a pretty key level. Alright? Don't mess with the 786, baby. Don't you dare mess with the 786. You know? Don't you dare mess with the 786. Trump made money this cycle for sure. Logitech, check my message history. I can't really do that, bro. I don't know how to do that on YouTube. Don't use the 666. I mean, it has nothing to do with the mark of the beast. It has only things to do with 2/3%. All right, 2/3%. Never trust a Sunday pump. Those are some good words of advice. Why are we still pumping on the 1 hour even though we have a bear div? It's a Sunday, and I wouldn't even consider this a pump, to be honest with you. Also, we have bullish money flow, right? This what's happening right now, in my opinion, is just low volume. Price can do whatever, right? Price can just float around. This is floating price. We're not seeing really anything crazy. If money steps in and starts buying this, boom, we could get a big pump, right? We could see a big pump, and we see it often on weekends. All right, remember what happened last Sunday? Where was that? Right over here. You know, look what happened last Sunday, right? Same exact thing. Slow, steady, we get a little bit of a squeeze, and then we drop, right? And the Sunday before that was up here. Look at what happened. Sunday, what happened? We had some bear div kind of forming in here, but we continue up a little bit, right? Sunday before that, we get that squeeze. It happens quite often in a downtrend. Sunday's like the day when the market's closed. Small money can move the market. The shorts are out. We saw the shorts out on the order flow. Like, look, all the shorts that were shorting like crazy last week. So many shorts shorting every big dump. Now they're pretty much all out, right? Pretty much all out. Longs out. So low volume, low open interest, choppy price action. Small orders can move the market. You know? Check logarithmic 1 week trend line cluster. Left side. POC fib with a log setting. Oh man, this is my brain, man. You're short circuiting me. I have no idea, man. This is too much. Check the logarithmic 1 week trend line. Cluster. Left side POC. Fib with log setting. Even a weekly fair value gap close inside. Potential bounce is real. Okay, he's saying potential bounce is real. That's cool. That's cool. Sunday pumps are a thing for a while now. Yeah. Yes, this could turn into more of a squeeze. I've already kind of gone over all the potential scenarios I'm looking for here. Guys, I do have to head out, but may God bless you all in Jesus' name. I do pray the Lord bless you, and may He bless your families. May He bless your trading. May He bless every aspect of your life. May we all grow in our love and knowledge of the Lord Jesus, Yeshua the Messiah. And I pray that tomorrow we all get some juicy price action to trade. I'll see you guys later. Peace.